So you understand you should be investing, but you think it's going to drop a little bit more. And waiting until it does drop to its absolute lowest is probably the smartest thing that you can do. I do agree with that. The main problem that I'm going to help you out with is, when is that time going to be? When will the market be at its lowest? We figure that out, we're going to be very rich. This year has been crazy. If you had $10,000 in your investing account a year ago, today you'd have probably around $8,000. The total stock market has dropped 20%, and many individual stocks have dropped double or triple that. Putting money into the market right now is just plain scary. The alternative to that, though, is to just keep your money in cash or put it in a savings account where they're going to offer you a generous 0.01% or 0.05% if you're lucky on that interest rate. But we can't forget that inflation has been all the rage lately as well. Last month it came in a little above 8%, which means that if you didn't invest that $10,000 and you just had it in cash from a year ago, today that $10,000 would actually only be worth about $9,200 in buying power. The middle ground for right now might be to put it in something like a high yield savings account, which will at least get you 2% or so interest, which is way more than your regular bank. I made a video on the best high yield savings accounts, so I'll link to that below. Watch that one later. But we are here to figure out this whole investing landscape. I'm going to help you find the most optimal time to invest in this market. Some experts will look at charts and patterns. Others will study the actual businesses themselves and see if they can figure out when they're supposed to be at the toughest point in the business cycle, which should mean a market bottom. Some others look at the economy as a whole and predict how bad it may get, which should signify a market bottom. There's just one problem with all of those. No one can be 100% certain of any of it. Unfortunately, the stock market is not a perfect 100% correlation to how businesses are actually being conducted and even how good or bad the economy actually is. I've seen companies put out their quarterly earning call, and on that call they announce that they increased revenue by 20%, which is normally huge. The problem is that 6 months earlier, an analyst had said that they should probably increase 25%. And so even though the company's doing so much better than it was doing 3 months ago, it's doing a little bit less than what an analyst predicted, and so the stock may fall because of that. The stock market in general just has a mind of its own. A certain CEO of a certain electric vehicle company could tweet that he really likes to eat fruit, and people could overanalyze that and think that he's gonna put Apple out of business somehow. So they sell their stock in Apple and crash that price momentarily. This sounds crazy, but go look at the market in certain stocks and then look at tweets that happened at the exact same time. It's pretty interesting. So if we definitely cannot know when the actual bottom is gonna be, what is the best way to invest during a tough down market like we're seeing right now? Well, we have 3 options. And the first option is just not to invest, which a lot of people are choosing to do. Just hold on to your money either in cash or in a savings account. And if you're gonna pick this one, just make sure it's actually in a high yield savings account at least, so that you're not getting eaten too bad by inflation. But with this strategy, you're definitely losing money because inflation's just way too high right now. Now the second is to say, well, the stock market's down a bunch today from where it was a year ago, and a year ago I was totally fine and was okay with the value of VU or VTI at that time. So right now it's just on sale. This is a steal. So in this option, you just take your money and you throw it all in right now. And if you had bought in earlier at a higher price, then what that's going to do is bring down your total cost or your cost basis, and you'll just be in a better position for when it goes back up. You will make that much more profit. Now this isn't the craziest idea ever, and it might be for some people, but for those of you that are beginners or just starting out in investing, I don't necessarily recommend this strategy right now. While I think that the market's going to rise in the next 5 years and for sure in 10 years and totally blow away any of our all-time highs, I 100% believe that. But what I'm worried about is if you have a good chunk of money like $500 and you say, all right, I'm gonna throw it all in on VU today, and then you check back in next week and it's gone down a bit and now you only have $400 in there, your only experience is going to be that money dropping and you seemingly looking like you're going to lose money, and that's going to mess with your head a little bit. You're not going to like that feeling. So if you're just starting out, don't recommend that one. The third strategy is what I do recommend for beginners and even for non-beginners, honestly. It's the one that's the most consistent, it alleviates the most stress, and it has a pretty solid track record. This one is to dollar cost average. Let's use some examples. So just like in the example before, if you had $500 that you could invest and you're willing to invest, instead of throwing it all in today, let's just take $100 and invest that this week. Then at the same time next week, another $100. We'll do that for 5 weeks straight. If the price goes down next week or the week after, you'll feel happy because you have this money that now you can invest at a lower price. You'll also feel happy because you wouldn't have put all of the money in. And if the price goes up, you'll still be happy because that first $100 that you put in has now made some money. If it's gone up 10% or something, you just made $10. So you'll be okay putting some more money in now because you can see how the stock market kind of works and how money makes you money, and that's pretty cool. So during this time of high uncertainty and high volatility, there's not a lot of assets that I would recommend that anybody really be investing in. But I will tell you what I'm investing in and what my friends and mentors are investing in with net worths in the 7 and 8 figures. Some of them do invest in blue chip stocks such as Apple, Coca-Cola, Berkshire Hathaway, Johnson & Johnson, and Walmart. They especially like those named companies because whether we go into a recession or not, people will always have to buy the products that those companies sell. So it's not like those companies are going to go completely out of business or drop even too low. So it's a good, consistent investment. Others of them are investing in a little bit more risky things like crypto and real estate. And while I'm investing in that as well, it's not a huge portion of what I'm investing in right now. I'm going to wait till things get a little less volatile to start throwing a little more into those markets. Every single one of them, though, and myself, are investing heavily into 3 or 4 incredibly safe, diverse, and cheap index funds or ETFs. And the specific 3 that I recommend are all broken down in depth in this short video that you should watch now.